Hi guys, this is Anil again. This is my part 2 based on the new proposed legislation about the capital gain tax. We call it as a CGT, and that budget has been declared on 2026 on 12th of May. But this CGT will be applying from 1st of July 2027. So just wanted to give you a bit of a brief, and this is not a financial advice. Every person is different in their financial situation. So if you bought the property or in the planning of buying any property, please contact your the mortgage broker or the accountant to have a better understanding of this. But this is just a basic number that I wanted to explain you at the very bottom level. So please do not consider this as a financial advice. Okay, so let's say the purchase price again is 700,000. Acquisition cost is your stamp duty, your buyer agent fees, or your solicitor fees, all those extra costs that get added to your purchase price, capital cost. That total is $750,000, and let's assume that your selling price is 1 mil approximate in 5 years time. So ownership, what we have done here, just try to give you more specific, say mom and dad investment property. The share is 50-50%. So income for each in a job, because if you have a job, you have the mortgage, and that income for each mom and dad is $80,000 per year. Let's assume that. And inflation assumption is we took it 3% per year. It can go down, it can go up depending on the data from the government. So let's see that what happens is, with the current 50% discount CGT scheme and the new proposed inflation/indexation CGT, sell price is 1 mil, purchase price is 750K. Index cost base is not applied under the current 50% discount CGT, whereas in index price is applied in a new inflation by 3%. Your purchase price will be 869K. That will be your new purchase price indexation. So total capital gain under 50% discount CGT before discount is 250K, whereas there is no discount applicable in a new inflation/indexation scheme. So your property purchase price is the same, your discount is not there. So real gain after the inflation under 50% discount is not applicable, but real gain in inflation is 130K net profit. So taxable CGT for you is 125K under 50% discount scheme, whereas in new indexation scheme, your taxable CGT is $130,000 for that particular sale. Okay, mom and dad share under the 50% discount is $62,500, and new inflation, according to new indexation, new inflation is $65,272. So that 62,000 is getting added into your mom and dad salary each. So for 50% discount, your mom income is 80K plus 62.5K, 142.5K. So $142,500 under 50% discount scheme. That will be the taxable income of your mom and dad. But under new indexation scheme, your mom and dad income will get added to each is $145,000 a year for that particular year. So tax bracket for mom is 37% and for dad is 37%. So total tax under 50% discount CGT is for your mom and dad is 19,275, and under new scheme the tax will be $20,301. So that is the increase of the tax. So you can add, just in case if you receive the more price, you will be having more price. Okay, so what is the 30% that what we're talking about here on top of that inflation indexation and the 50% discount? There is a misunderstanding from the people. Is 30% is more discount will get added in a CGT. It's not the case of the discount. Let's assume your mom or a dad having a tax bracket of 20% or 16%, right? So what government is trying to implement, that your mom or a dad, whoever under the bracket of less than 30%, they have to pay minimum 30% of the tax bracket for the tax, right? So it's not about the discount, it's not about the the choice between 50 and 30. It's about minimum tax of 30%. That is the main conditions on this. If you want to know more about that, please contact us. We can give you more detail in this. If you like this video, please press like and subscribe to my channel and hit the bell icon at the bottom of this.